Hey everyone, and welcome to a very special edition of Pathfinder titled The State of the Space Industry, where we'll be covering the top stories and trends from this past year around four key areas of the market: launch, OSAM, Earth observation, and SatCom. My guests are members of the Payload editorial team who will be discussing what they've learned during the article production process, particularly as they've interviewed various execs and stakeholders. We cover a lot, so we've broken the series into two episodes. Last week, we covered launch and OSAM. This week, we're covering EO and SatCom. But before we dive into today's episode, a quick word from our sponsors. This year at the National Space Symposium in Colorado Springs, be sure to drop by the Italian Pavilion and say hi to the Italian Trade Agency. They'll be joined by 12 groundbreaking companies showcasing their technologies all under one roof. From aerospace giants to pioneering startups, the Italian Pavilion this year represents a diverse spectrum of expertise and creativity, combining both tradition and innovation. Moreover, this year we'll see the largest Italian delegation the conference has ever seen in attendance. You can find them in South Hall, booth 603, or you might just want to follow the smell of espresso. On April 9th at 3:30 p.m., the president of the Italian Space Agency will join the pavilion for a networking event open to all attendees. Don't miss out. All right, Jack, welcome to the show. Thanks for kicking off the second part of our series, The State of the Space Industry. Before we jump in, maybe give some of our new listeners a quick 1-minute background as to who you are and what you do for Payload.
Sure, and thank you for having me on the pod. So my name is Jack Kuhr. I'm the research director at Payload. I both write for the daily newsletter and daily more reporting articles, and I also write longer form research analysis pieces that come out every Wednesday.
That's right. And for those of you who are not signed up for Payload's research newsletter, please find us. You can do www.payloadresearch.com or payloadspace.com/research. We've been publishing once a week for the last couple months, and there's been some great stuff that Jack's been helping put out and really kind of driving the direction of that. So, but anyway, today we're going to talk about Earth observation and EO. So, Jack, my kind of opening question for you, since we are talking about what has happened, how do you think the EO market in general has fared in 2023? How would you characterize it? Good, bad, great, ugly?
Good, bad, great. I would characterize it as solid. There's good things and bad things. I think the bad side to it is we're not seeing a market that is growing exponentially. And I think we're also not seeing a commercial demand side really materialize in a way that people might have thought it would. So like the utility companies or oil and gas or all the other non-government organizations buying space-based sensing data is not growing as fast as people thought. So that's not horrible. It's just managing expectations with that. I think the effect of that is you probably have a slightly overcrowded market. When demand is not growing as fast as people thought, it might be a little bit more crowded for people fighting over those revenue pieces. But there are a lot of good indicators going on in the market now. I think the government side is still strong. It's still stable. We have a lot of public companies, public EO companies that are starting to show profitability, which is really exciting, and I think an important way of judging a more maturing market. It's definitely not matured, but the market isn't this massive I don't know, like Tesla style or SpaceX style market that is like ever growing. You have your big players that are doing, Planet's doing $200 million a year revenue, which is great. I think Maxar was doing $1 billion a year. Spire was doing $100 million a year revenue. So you have these really nice businesses, just not these massive billion-dollar opportunities, multi-billion-dollar.
Yeah, so you're kind of alluding to something that is worth mentioning, which is the fact that the EO industry is one of the few, I'll say one of the few sub verticals in the space industry that actually has a number of companies that are public. specifically pure play EO businesses. So BlackSky, Satellogic, Spire, Planet. How have the public EO companies have done in the last year?
Yeah, well in terms of the stock price, not well, and that's another one. That's another managing expectations thing, and I think it's not the most appropriate way of looking at how a business is doing often. But they're all growing and all growing nicely. They are also Spire just recently came out with in the cash flow positive territory. Same with BlackSky, which is really positive news. So I think a lot of it is just realizing that these companies aren't going to be growing by 100% year over year, but you can have really, really great unit economics on Earth observation. You can have nice margins on Earth observation. You can have pretty solid barriers to entry if you have a nice niche in the market. So it is, for me, it's nice to see space an industry that is looking at profitability and is generating real revenue and is not just a launch company with billions of dollars of capex they need to spend.
Were there any major fundraisers in 2023 that you're aware of?
Yeah, there were. I mean, it might not be the same level as 4 or 5 years ago, but I think investors are thinking harder into it. It's no longer about, hey, I can build a capability. Here's a cool widget. Let me get funding for it. Like it needs to be a product market fit, and you need to solve a real problem. It can't just be a solution for a problem that no one has. And investors are really focused on that and are investing to that. So you had companies like Albedo, who's in that VLEO kind of market that can have higher resolution imaging. You have Tomorrow.io had a really big fundraise last year, which I think was in the $80 million range, and they're focused on weather data, weather analytics. You also have sovereign EO companies that are getting funded. I think a lot of countries are looking for kind of sovereign capabilities in general and really have pride in that, and they're getting funded quite well. So it's not, I mean, the market might be maturing in some ways. You have like the big winners already. Planet's been around for 15 years, but there's definitely still a VC funding market that's alive here.
Yeah, I think that's a fair point. I think there's obviously a lot of competition. Actually, might actually lead in better to my next question, which is effectively, do you think it's viable for new startups right now to secure venture capital in the current EO market? Like, I guess, like, what does it take, right? And you brought up a few examples just to kind of touch on Albedo, which I think is interesting. VLEO, very low Earth orbit. EO platform doing primarily optical imaging, but also thermal from my understanding as well. Like what they're effectively saying is like, look, there's 30 centimeter, 50 centimeter resolution, but we're going to do something that's 10 centimeters, right? Which is effectively which is a very different market offering, at least for the commercial space industry, or for the commercial industry, I should say. Because it effectively is similar to aerial imaging, right? At this point, you've actually kind of opened up a new market. So in my mind, if you're a startup trying to pursue something in EO, if you're going to go after raw data, I think it needs to be a pretty stepwise change in resolution quality. That's probably part of it if you want to get funding. Otherwise, you need to offer some type of analysis or insight tool that just doesn't really exist right now. But I don't know. What do you think? What's your feeling?
Yeah, that's fair. It's not all about resolution. I think the days of funding these like do it all, let's just take a generic picture of the Earth and try to sell it on the market, I don't think those companies are going to get funded. I mean, that's the real beauty of this industry in many ways, and investing in deep tech and hard tech is that you create these barriers to entry with investing a lot up front, and then it's going to be hard to create another SAR company that's going to compete with Umbra and Capella and take a similar type picture. But they're beyond just higher resolution. You have data analytics, and you can also niche off different end markets too, and can be hyper specific to that end market, and in that way grow the broader pie, maybe not exponentially, but grow it nicely. So you can have, it could be wildfire detection, it could be edge computing is something that companies are looking to get into for certain use cases that need it. These sovereign capabilities, I think, is very important. Where if you're a Japanese EO company, maybe you're just focused on the Japanese market, but that's still a very nice market. You have weather, climate. There's a lot of different sub markets that I think are getting invested, or VC funds are willing to invest in, because they're solving a specific problem, and it might be a smaller TAM, but that problem is still worth solving.
Yeah, I think it's funny. I was attending. I had the opportunity to attend a class at Harvard Business School recently, and you
taught a class at Harvard Business School.
I don't know if I'd go that far, but
you facilitated it. You have to brag on yourself a little bit, though.
No. But we'll use facilitate, but it was interesting. So it's a new course it's a relatively new course. It's been around for 3 years now. But it's about space. It's about space finance and the economics of the industry. And anyway, it's fascinating. And what was interesting about the class is that it's about 100 MBAs. I had the chance to be a guest along with Kevin Wheel, who runs product over at Planet, and then Jeffrey Manber, who's a senior person at Voyager, focusing on Starlab. And but anyway, there's 100 kids in this, 100 MBAs in this program. 70%, call it 60, 70%, maybe a little higher, are like non-space people, just like folks who are like smart folks who just like want to learn more about space. Probably 20, 25%, 30% are people with actual space industry experience. And, there was a few different case studies, but anyway, the reason why I bring this up is because one of the case studies that we talked about was actually on Planet, was about the Earth observation industry. And I don't want to get into all the detail because we promised Chatham House rules for the day. But it was very interesting to see that from an outsider's perspective, the students actually picked up on a very key dynamic that exists in EO, which is that there's not been a ton of the commercial demand has not been what we thought it was. Like that's reflected in a lot of the earnings reports of companies like Planet, right, which reported recently, relatively recently, and this is a common trend. Like commercial demand has not been what we thought it was. And then, I think there was a period of time where the industry was like, well, it's not the raw data that's important. It's the insights that's driven from the raw data based on, various analysis tools. And what was interesting is one of the threads that came out of this class was, well, actually, it's not even that. Customers want to know they just want to know what the decision is. They don't really care about hey, this is the raw data. Here's what I'm looking at. And here's some insights based on that raw data. That customers, in fact, really want to know, okay, that's great, but like what decision am I making, right? What that end customer just wants to know what decision I need to make, they don't want to go through that additional step. So, and I know this is something that the EO market has been wrestling with for a while, and you're alluding to it by saying like, there's a value proposition and going niche and saying like, hey, we're going to only just work on the ag industry or the mining industry. So anyway, I just thought that was fascinating, right? That like that taking an outsider's perspective, the conclusion was something that the Earth observation industry has been trying to figure out for some time. But let's talk about Spire and BlackSky, because they are approaching or have reached positive cash flow territory. Any lessons there that you can learn? Or do you think that that's a short-term dynamic? Long term, it's more challenging. I just want to point that out, just because I thought that was a interesting piece of news.
Yeah, I mean, I think there is a lot of reasons why a young company shouldn't SPAC or go public, and I think it's probably not a proper way to raise money for a R&D company, but I also think there are some benefits in putting pressure to be profitable. And I think in general it is great to see it in the industry. I mean, they're not profitable yet, or haven't shown consistency in it, and in many ways it's just cash flow positive. But it's good to see companies in the industry getting to that place, and for companies to mature to that place. And also when you start getting companies to cash flow positive, then you can start adding different sources and pools of capital. PE can start getting involved in space, and it can graduate from just the VC world. So I think the lessons are that, like, if you're not seeing a market grow at this 100% year over year rate, or 50%, and maybe it's just that 25% year over year, then, like, okay, maybe it's time to look at you've hit a certain point in maturity as a company, and maybe the industry is getting to a certain point, and looking carefully at cash and profitability is that next step for a rational business person to see.
All right, let's talk SpaceX. One of the things I have heard a number of people in industry say is that they think that SpaceX and Starlink and Starshield and what they're doing in LEO, they're basically going to own LEO. And anyone doing anything in LEO is screwed. And the idea that, SpaceX will slap a bunch of sensors on Starshield, and all of a sudden, they'll have an optical sensor, they'll have, effectively everything that's out there, if they think it's a big enough market, and effectively outcompete everyone because they can build at the lowest possible cost and they can launch at the lowest possible cost, so they have the best unit economics. What do you think of that argument?
Well, we saw that come to fruition. We saw that they're now an EO player, I guess. They got Joey Roulette just came out with an article a couple weeks ago disclosing that they won I think it was $1.8 billion contract with the NRO. We don't know the details on that, but it is for some sort of imaging, remote sensing capabilities. And I think it is not, it's not a good sign for the EO market. And I don't think SpaceX is going to try to be an EO player. I think the market is much smaller than SatCom. Maybe they'll have these onesie twosies, big $1 billion contracts to do something like that. But SatCom is just way bigger and is a much better angle for them to go on. It's in general, like, that's not their core competency, right? So the government picking them, I mean, they've also, picked Maxar and BlackSky and Planet for massive $1 billion remote sensing contracts as well. But the fact that they're picking SpaceX too is not a great sign for the industry. It shows that prices aren't where they need to be for the government, and there's not a natural other player that has done this before to step in. I think from the government it makes sense if they're able to get the best quality, which SpaceX is going to give, I have no doubt in their product innovation on EO and imaging, and for the best price. It makes sense for them, and they have in some ways a duty to give them the contract if they believe they're going to give them the best product. But it's something to keep an eye out for the next couple of years in this market.
Yeah. Look, there's a lot of really smart folks out there who know a lot about the EO industry at a very deep level. Folks like Joe Morrison over at Umbra and Arvin, who I know you mentioned earlier. So I think it's hard. It might be a little hard for us to come up with something more insightful than they would say, but I am actually curious from your perspective, Jack. Do you feel good about the market long term, like from the perspective of like all of these companies trying to go after this market? Do you think there's gonna be a lot of consolidation? Feel free to answer that however you may, but I would love you to weave in a little bit of what you think is going to happen to the public companies. There's a number of EO players in the public market. I know they all do different things, but do you think in 3 years they'll still be there, still a public company?
And they're and they're solid companies. I mean, I think the stock price is just tracking. That's the stock price is not something I do. I'll look at the income statement and cash and where that's at. I know Planet, I think, has a ton of cash. I don't know if you're familiar with that number, but they have a ton of cash on the balance sheet.
300 million.
Yeah, that's great. That's really, really solid, and you don't see it that often in these space businesses. And they have, they might not be profitable yet, but that gets them enough bridge to there. I think in general, if we're just talking generally what the future of the market looks like, I think what is Earth observation? Earth observation is as you mentioned, these Harvard Business School students talking about is data, and data that you can make a decision on.
Mm-hmm.
And if the need for data is growing at 5% CAGR or 15% CAGR, the demand for EO, that can be debated what that number is going to look like, but there's no doubt that the world is going to need more data every year, maybe until infinity. I mean, that's modern warfare is based off data. Supply chains, AI is driven off data, and EO just generates proprietary data. It sees the Earth breathe. It sees what's happening on the Earth, and I think that is the bull case for the industry, is that it's not going anywhere, and there's going to be more demand for it. Whether commercial is slower or faster than we think, who knows? But the demand for data is going to continue to increase, and you can make a nice little business out of it serving that market.
So you think all public EO companies that exist today will still be there in 3 years?
I'm less worried about the public EO companies than I am about some of the other space SPAC businesses that I'm not sure have the right business model to be there. The question on consolidation is interesting. We've talked about it for a number of years and haven't seen it yet, but consolidation does make sense in this market if you can have a tangential capability that makes sense, and you can join forces and get some synergies out of it. I think that can be a no-brainer. We haven't seen it yet to a big degree, but I think that's a possibility going forward.
Yeah. All right. Well, we'll see. This is an interesting one, and a lot of open-ended questions for the market. But Jack, thanks for being on the show. I appreciate it.
Thanks for having me, Mo.
All right. Till next time. All right. So Rachael, you are closing us off our State of the Space Industry series, and we might have some new listeners. So I've asked every single one of you guys to just give us a very quick 1-minute introduction, who you are and what you do at Payload.
Yeah, absolutely. My name is Rachael, and I am a reporter for Payload. I've been with the company since we launched the daily newsletter back in November of 2021, covering all things space, space industry, policy, business, government, civil, all that good stuff for Payload. I also have been writing Payload's science newsletter, weekly science newsletter Parallax, for the last year and a half, although we just sadly retired that publication because I am now focusing on nuclear energy for Payload's new sister publication, Ignition.
Well, we will talk about nuclear energy another day, and there's a lot to talk about, and very exciting things to talk about. But for now, you were in charge of SatCom for the state of the industry. So maybe just to kick things off, how do you think the SatCom market fared in 2023? Bad, good, great? What do you think?
I think it's really a mixed bag. I think on the market side of things, the capital environment side of things, it was a bit of a tough year. It's hard to attract new investment into the sector. For private equity, things have kind of cooled on SatCom. But from a technological perspective and a growth perspective, in terms of breaking into new markets and new technologies, developing new technologies, I think it was a really exciting year. There were a lot of partnerships formed, and there were a lot of new advancements in direct-to-cell technology, in aviation connectivity, and there's a lot of M&A activity that I think was an interesting shift in the sector. So a lot of really exciting activity going on, but it is still tough from a capital markets standpoint, I think, in SatCom.
How do you think Ukraine has influenced the SatCom market in general globally? And are there any general trends that you've noticed from the government side, whether it's from a customer demand perspective or an investment perspective, that's worth highlighting?
Yeah, I mean, I think the war in Ukraine, when war broke out in Ukraine, and instantly communications infrastructure was impacted and was an immediate target of Russia's in the war in Ukraine. I think that drew a lot of people's attention to, okay, now we really have to build these secure systems and resilient systems, proliferated systems in a way that we didn't, I mean, not that we didn't have to before. And then also with the imminent potential conflict with China that's always on the top of mind for every DoD official that you ever talk to. This issue of resilience in communications and of proliferation is really, really key. And I think in the past year, we've seen a lot of government investment. I mean, you see these major contracts coming out of the Space Development Agency for their proliferated warfighter space architecture. You know, I don't know how many billions of dollars were allocated just to the transport layer of that program in the last year. You're seeing a lot more investment there, in part due to the war in Ukraine and the priorities that have risen to top of mind. Things like laser links are now being explored. I mean, you just saw Starlink recently had an announcement where they're now selling laser terminals for their satellites. Like this issue of getting information around quickly and in a very, very secure way, I think is changing at least the government perspective on how to do satellite communications.
Let's pull on one particular thread or technology that's really started to gain a lot more media attention in this past year, which is direct-to-cell, the direct-to-cell market. It's a big market. I think the numbers that are being thrown around are in the hundreds of billions, 300 billion plus. Maybe talk a little bit about who are the players in direct-to-cell. Well, actually, why don't we do a quick definition of what is direct-to-cell, and then maybe talk a little bit about who are the players and how are they positioning themselves?
Yeah, I mean, direct-to-cell, to use, I think it was Link that coined this term, is a cell tower in space. It's using a satellite to provide internet connectivity or broadband connectivity to cell phones on the ground. And the benefit of that is that you don't need to be near a terrestrial cell tower to use your phone when you need it. You can be in the middle of nowhere. And as long as you have, as long as you have your phone on you and there's satellites above you, you can connect, you can send messages, make phone calls, depending on the, robustness of the service that you have access to. So that is what direct-to-cell technology is, and it's very new. There's a lot of companies that just sort of rushed into the space, I think, in the last year or two, to try to take advantage of this new technology that was emerging. So Link, I've already mentioned, is a player in the direct-to-cell space. Starlink, SpaceX is a major player launching direct-to-cell technologies on their new generations of satellites. Apple is getting in on it with, I believe, Globalstar. Iridium is AST Space Mobile. There's a lot of players that I think are now trying to really scale up their capabilities in direct-to-cell and take advantage of this new market. Like you said, potentially hundreds of billions of dollars market, looking at the huge mass of people with phones that are potential customers for this type of thing.
Right. And we know in terrestrial cellular communication, there's obviously multiple telco providers, mobile phone providers, or the phone service providers. So certainly the market could be big enough for a number of these players. But let's talk SpaceX. And SpaceX has already come up a number of different times across both episodes, but here they are. So maybe let's talk a little bit about how the rest of the SatCom and telco industry view Starlink, right? And I think as it relates to direct-to-cell, Starlink, it wasn't last year, it was actually before that, they announced that partnership with T-Mobile to partner and bring direct-to-cell capabilities to T-Mobile customers. But maybe talk a little bit about that and just in general, like, how do you think the SatCom and telco industry views Starlink today? I know some folks are like, not worried, like, do we have a differentiated offering? And, some probably, whether they announce it or mention it publicly or not, are probably pretty terrified of what that could become. But you've also interviewed a few people. So maybe, I don't know, talk a little bit about that.
Yeah, absolutely. I mean, it's like you said, like, how can you have a conversation about the state of the space industry without bringing up SpaceX and Starlink over and over and over again? I think it's just the way
Rachel,
they position themselves.
Mm-hmm. I specifically told Jacqueline, I was like, because we talked launch, and I said, you cannot bring up SpaceX because we know they're doing great. But even with that guardrail, SpaceX still came up. So it's hard.
Yeah. I mean, how do you avoid it? I think in the direct to sell space, it is something that I've spoken with several company leaders about, who are also pursuing a direct to sell option. I spoke with Iridium CEO Matt Desch about this, and with Link CEO Charles Miller about this. And in every conversation, Starlink comes up. But you're right, they do. The other players in the space, I think, are looking for ways to provide this capability in a different way and to a different potential market than Starlink is. Starlink is really, direct to customer, right? They have this kind of retail option for direct to sell, where Link is, say that Charles Miller told me that Link is differentiating itself by partnering with telecom companies. And Iridium is like Iridium does, is pursuing this more or less specialized, like industrial option, a more specialized capability for their direct to sell services, and partnering with phone manufacturers as well. They're now pursuing a standards-based approach, which is a departure from their original approach, which was to partner with Qualcomm. I think everyone's trying to find their angle into this industry, and into providing direct-to-cell services that maybe is different from what Starlink is providing. Because, I mean, when you own the transportation to space like Starlink and SpaceX do, and you operate more than half of all of the satellites in Earth's orbit, not just low Earth orbit, in all of Earth's orbit, you have the upper hand right away, and it's hard to compete.
One of the interesting dynamics that I noticed and I found ironic was a couple of weeks ago. If you remember, SpaceX had a lot of its customers out at Starbase. They flew them out to Starbase for the weekend. Come check out Starship. Come check out how much we can fit in the fairing of a Starship. But a number of those customers are out there were their telco, broadband like competitors, and you can't help but wonder that SpaceX is having all these people come out and tour their base. Meanwhile, they're like, yeah, we're probably going to take half of you out of business. So it's just I thought you don't have to comment on that, by the way. Just an interesting dynamic. That I noticed. But let's switch gears. Yeah. Let's talk edge computing, right? So there's a tremendous amount of data that's now coming out of the industry. Always has been, but it really has been accelerating. There's been sort of this shift towards edge computing, so as not to kind of overwhelm ground stations and ground systems. And we will actually have the Armada CEO Dan Wright on a future episode to talk actually about their edge computing full stack solution that they're partnering with Starlink on. But just kind of curious, like what are some of the things that you've seen or anything you've learned or heard on the edge computing side? What's happening there?
Yeah, I mean, I've had conversations with people, I think, at this point about what edge computing means for ground infrastructure in satellite communications. Obviously, as you said, there is a ton of data being collected and processed and transmitted by satellites all the time, and that amount of data is only increasing. I'm sure you talked with Jack in your EO section about that, just huge mass of data that is being created and needs processing before it can actually be used by anybody on the ground. And where that processing is happening matters a lot, because ground infrastructure is limited. You're only able to downlink from so many places at so many times, at so many points in your orbit. And in a market where speed matters so much, where people want insights right now, they want them instantly, they want the processing done, they only want the data that actually really matters to them and that they can actually really use. Edge processing is a huge enabler of that capability, because it allows you to whittle down this huge volume of data that you're collecting on your satellite into something that can be transmitted quickly to the ground when it's needed. And so I think that's something that ground operators are really thinking about right now.
So given all this growth in technology and all these interesting new markets, and we're talking markets in the billions and hundreds of billions, like how do you think investor sentiment has evolved between the private equity folks and the VC folks? Let's not even talk about public companies right now, but like just in terms of the private markets, anything you're seeing or sensing?
Yeah, I mean, I think with these new technologies, things like direct to cell, I think venture capital, which has these kind of longer timelines, a higher tolerance for risk, that's really where new investment is coming from, I think, in the SatCom industry. I think for private equity, where you really want to see cash and revenue being produced, it's a tougher sell. And so I think that that's been reflected in the capital activity that we've seen in the last year.
Yeah, fair enough. Yeah, I think that, from what I've gathered from talking to folks, especially investors who are not in industry, they're not like space investors per se, but they're just like maybe generalist or very sophisticated, but maybe not necessarily like, heads down in the industry. Obviously, everyone's talking about Starlink, right? There's no other topic of conversation at SatCom. It's what is Starlink a business? Does it work? And then if it does work, how many telco providers is it going to take out of business, right? Like that. Those are the questions that people are asking. I actually do think the market's really going to open up in a very significant way if SpaceX ever spins out Starlink into a public entity. I think that's a big question now. I think if you had asked me 6 months ago, I would have said definitely Starlink will go public. It will go public, but now I don't feel that way. Actually, I'm not sure. I would say I'm not sure.
You don't think it'll go public?
Yeah, I think I lean towards it. It won't. That's my current thinking. It kind of evolves as I hear things, but right now my thought is it won't. Only because you go public for really, there's a few different reasons, but the main reason you go public is access to capital markets. It's access to capital. SpaceX doesn't have that problem. They're the most valuable, they're more valuable as a private company than any prime that's public. They have the ability to raise $1 billion overnight if they want to. And they have endless demand for their stock. So why go public? I asked Brett Johnson this question at Satellite on a panel I was moderating. And, obviously they have to say, oh yeah, well, we're still considering it. But there's a part of me that's like, maybe it's already been decided internally that like, hey, we're not going public anytime soon. So, but I do think if they do go public and Starlink is,
Gwynne Shotwell said something along those lines very recently that, it's not really in the cards in the near term future.
Yeah. So, people think about that people try to dissect that in different ways. Well, does that mean this year? Does that mean next year? Does that mean the year after? I think that's, to me, one of the big things that's really interesting right now is that the Wall Street analysts don't know how to model a business like Starlink. They don't know what the demand is going to be. They don't know how to think about unit economics, like pricing. There's endless debates right now on Wall Street. And a lot of those questions aren't going to be answered until those books are completely open and transparent and everyone can see where the subscriber growth is coming from, where how the unit economics in different regions look, the cost structure of getting those, the real actual cost structure of getting those satellites up. What does it cost to build those satellites? I do think that once there's a better understanding of those questions, I think that market for investors is gonna be better and bigger around this market. I'm assuming that all these numbers and all these questions I'm saying are, they're that the SpaceX numbers look good. I think if they don't look great, then it's gonna have the opposite effect. So we shall see. You can't talk about Starlink without talking about the FCC. So how do you think the regulatory environment is evolving? There's been a lot of fight, right? People suing and companies saying, no, you can't approve that and can't approve this. Like, how have you seen the regulatory involvement?
I mean, spectrum is everything in satellite communication. It is finite, it is limited, it is hotly contested, it is very, very valuable. And yeah, I think was it just this week that a request that SpaceX submitted more than a year ago to use a few bands of spectrum that are, currently operated or currently owned by Globalstar and Dish. The FCC threw out that application. They said, you don't have the, good enough argument. We would need to make new regulations and new rulemaking to allow you to use this band of spectrum. I think that can only get more contested, right? It can only increase in kind of heat as time wears on, because you can't find more spectrum. You can operate on narrower bands. You can operate on different frequencies. There's been higher utilization of the Ka band and V band frequencies, or push towards using V band frequencies in the last year or two. But I don't know how the FCC will respond to that. How the FCC will deal with those questions. I don't know. I don't have the crystal ball that tells me. I wish I did. What do you? I don't know. Have you heard anything?
No, I don't have a good sense on the regulatory side. It's not something actually I spend nearly as much time as I'd like. But I don't.
Yeah, I wish I knew. I think spectrum it's a tough and very technical world, and it doesn't get easier. There's always going to be a battle over spectrum, I think.
In one of my interviews back when I was a bit younger, my interviews for a job in the banking world, I actually pitched Dish stock. This is a while ago. So I actually, this is before, space was something I spent almost every day on. Pitched Dish stock and did this whole deep dive on spectrum, but that was a while ago and I don't remember everything. So don't ask me any questions. Okay. My last question is, any bold predictions for the SatCom industry for this year? Anything, it could be anything, like companies, any M&A, consolidation, investment, like big news, anything that you're watching, looking out for, you think is going to happen?
Yeah, I think in 2023, we saw a lot of consolidation activity, M&A activity, multi-orbit mergers like Viasat, Inmarsat, and Eutelsat OneWeb. I am curious to see if that will continue. If there will be more M&A activity in SatCom space, I think, I have the sense that those kinds of mergers will continue. I'm also just really excited to see what happens in the direct-to-cell space. If you begin to see like a real market develop, a real revenue opportunity for direct-to-cell services, because I think we're very, very early in that market. And I guess it's not really a prediction, it's just something I'm watching. But I'm excited to see how those two pieces of the industry develop.
And we shall see. There's a lot of open-ended questions there, but Rachael, thanks for being on the show. Really appreciate it. And that wraps up the state of the space industry for 2023. And for our listeners, please don't hesitate to reach out with any feedback on this series that we have done. It's new. It's brand new. We're just kind of testing out different types of ideas. But feel free to reach out to myself or Editorial with any feedback you have on the show. So thanks again for listening. And Rachael, thanks again for being on the show.